Welcome, guys. If you're new here, I do in-depth stock market analysis videos on all kinds of things: dividend stocks for passive income, SPAC mergers, disruptive tech companies, penny stocks, individual stocks to buy now. But none of this is investment advice. This is just an opinion channel about money. Now, on this one, I want to get into CCIV, which is looking to merge with Lucid Motors. This was not actually a firm deal. This one is kind of rumor and speculation. It's a very firm rumor, mind you, but the deal isn't announced, and so we don't have an investor presentation. We don't have a lot of insight into Lucid, but there's a ton of interest in this one right now, and so I wanted to do at least a preliminary view of the company, the prospects, the deal, all that kind of thing. And if the deal is finalized, I'll do a follow-up video. So this one is part of a series on these SPAC companies. I'll link the full playlist above. There's probably about a dozen videos in there on all kinds of these deals. If you're interested in this one, you'll probably want to check out some of those ones as well. So the way I like to do these is I do a bear case versus a bull case analysis. So I'll present some points supporting each, and then at the end, I'll do a final summary and give you my opinion on which case I think is stronger. Okay, so first, before we get into the bull and the bear case, let's talk a little bit about the two companies involved. So first up, we have the actual SPAC company itself, CCIV. You know how these things work. This is just a shell company. It doesn't do anything. It's just out there with a big pile of money looking for a private company to acquire. Now, this is a big one. This one is around $2 billion. I think the only one bigger is Bill Ackman's PSTH, Pershing Square SPAC. So, you know, this one's a little bit unique. It can go after really, really sizable private companies. So whatever it lands is going to be a big one, and Lucid Motors certainly fits that category. If they did do a deal, it would probably be around maybe $15 billion. That's been the rumored size of this one. So very, very sizable deal. So really, when you analyze these SPAC companies, because they don't do anything, I think that you can only get really some clues from the management team. Who's behind them? Who's promoting them? Who's going to put the deal together? What's their expertise? All that kind of thing. So this one is pretty easy if you look at the head guy. This one's put together by Michael Klein. So he's a Wall Street veteran. I mean, he's been in the business since 1969, and he's been involved in doing deals in finance, investment banking for pretty much that entire time, plus a bunch of other things, you know. So he's done a lot of deals, and he can get a lot of deals done. He's done a lot of SPACs. You know, he's got 7 launched in total. Not all of them have been great. CCXX merged with Multiplan, and that one did not do well for investors. There was a massive dilution after the fact, which is a common complaint with these SPACs. You know, retail investors will buy in, and then either the PIPE investors will dilute and dump a bunch of shares, or the private shareholders, the founders, they'll dump a bunch of shares. So these things are really vulnerable to a subsequent dilution after the merger goes through, and that is definitely what happened with MPLN. And you know, some of the criticism that's leveled at these SPACs is that the folks behind the deal don't really do anything to prevent this, and in fact, sometimes it's what they're looking for as well. They want to just a quick cash out. So you know, on the one hand, I like the fact that Klein is a really, really good deal maker. I think he can land a big fish. I think he can put together a quality deal. But I think that, you know, there are some indications from his track record that he's not necessarily going to put the best deal together for you. Now, the other thing we should take a look at, because this one is just a rumor, at least at the time when I record this video, we don't necessarily know that it's going to go through. They're negotiating, they're talking, they're trying to figure out terms and all that kind of thing. So, you know, what are the prospects of it going through? So there's a few hints, right? We can take a look at a number of things. One thing is that if you go to Glassdoor right now and check out the job postings from Lucid, they are actively recruiting for executive positions for investor relations and for an SEC reporting manager. So these are staff roles that you would need to fill if you're going to be a public company. So there's certainly a very strong indication that they want to be a public company somehow, either through a SPAC or perhaps through an IPO or maybe even through some other SPAC, but at least we know that they want to go public in the near term. Another indicator here is this guy, Andrew Liveris. He is actually on the board of both these companies, right? So he's involved in the SPAC company for the investment deal, and he's also on the board of Lucid Motors themselves. Exact same guy. And he's been in place in both for a little while. So it's kind of an obvious deal. Not that this is a crazy unusual. I mean, we've seen this before. A lot of these guys are on tons of different boards. Could be a coincidence, but at the very least, I think it would facilitate the deal by a wide margin. And Klein himself has ties to the Saudis. The Saudi investment fund actually owns a majority stake in Lucid, and Klein has a long history of advising the Saudis in a lot of different investments. So there's some pretty tight integration there as well. So, you just look at all the players and what's going on, and it certainly seems like they're all tight. And they certainly would be each other's first pick, I guess, in terms of doing a deal. Now, that said, Klein didn't initially go after Lucid. He initially went after a different company and the deal fell through. Not that unusual. Not all these things work. But, it's not as if this deal was purpose-built for Lucid. We have every indication that it wasn't. But now that they're actually talking and looking, maybe they can get something done, I think the odds are high that the deal will come through. Okay, so let's take a look at Lucid and what they do. So basically, they are targeted squarely at this luxury EV space. They want to produce luxury cars, average of about 70 grand a pop. They have a few different models. Some are actually a little bit more expensive than that. So these are really, really top-end cars. Now, they didn't start out this way. They were founded back in 2007, and originally they were going to go after the electric powertrain market, which a lot of EV companies do. They just want to build the core powertrain and let somebody else deal with the body of the car and all that kind of thing. They switched gears, though, in 2016, and they actually started to build the whole car. They became more of like a full-stack EV offering, modeled very much after Tesla. They're pursuing the same business model that Tesla has, bypassing the dealership and doing the whole thing themselves, building almost all of the car themselves, designing it, the whole thing. So in 2019, the Saudis got involved. They closed a round of funding with them. I think at the time they really needed that funding. They were trying to expand and didn't have the funds. The Saudis come in, and I think they dumped about $1 billion in that deal, and that actually allowed them to expand and really complete the plant that they were building in Arizona at the time. They finished building that plant in 2020 with that Saudi money, and they have plans to produce 30,000 units a year at that facility. And then they want to ramp up. Their ultimate goal, they say, is 400,000 units a year, which would mean additional plants in additional locations. There's a lot of talk about potentially building a plant in Saudi Arabia, for that matter.
What's the upside potential?
Okay, point number one in the bull case is the backers that are behind this thing. And it's a really, really good story, right? Because on the one hand, you have some serious guys on the SPAC, not just Klein, but the investment team that he has behind him on the SPAC side. These guys don't play around. Like, this is not some small private investment company with 30 different players in here that have all pooled a couple of bucks. This is a major, major SPAC with $2 billion and some serious investment banker expertise behind it. And then on the other side, you have Lucid, which is a serious company. They have real executives with a lot of depth, really, really impressive resumes. And on the financial side, you have the Saudis backing this thing, right? They have, a ton of money, and they're really, really serious about EVs. For the Saudis, the whole EV business is a huge hedge against the legacy oil business. They need to be here. They want to be here. And I think they're really, really serious about producing a high-end luxury car. It fits perfectly with what they want to do. So nobody's playing around here. Everybody is serious about building a real EV company. The CEO of Lucid is an ex-Tesla guy. He was the chief engineer at Tesla on the Model S project, and he's now the CEO of Lucid. So he's a real senior guy with deep technical expertise in exactly this business, which is pretty awesome to see, right? He's not just some founder that fell into this with a couple of patents. He's not just a generic executive that got promoted up to the position. This guy has real deep expertise in EVs and in these sorts of cars. I like the sales model here. You know, these guys are going full stack. They're bypassing dealerships. It's essentially the same delivery model, direct to consumers, that Tesla is doing, which I think is really, really great. Like the stickiness that builds in terms of customers and the brand and all that kind of thing by cutting out the dealership, cutting out the margins that would have to be given up to a dealership. It really, really streamlines that business model. And I think just like Tesla, they have the ability then to tap into additional service-based revenue with their customers, and I think build some real deep customer loyalty. And I think that's an awesome fit in this luxury EV space. You know, it's one thing to build a mid-range commodity-based car, but when you go after that high-end luxury space, I think you're going to get some real value in the brand, and customers are going to have an additional layer of loyalty, I think, when they deal with you directly in that space. And I'll tell you, this is a key differentiator too, in terms of that luxury car offering compared to what they're doing with what Tesla's doing, right? Because the Tesla strategy all along has been to, hit the luxury market first, get some money out of there. It's higher margin, but, drill down into that mid-range space. Tesla wants to move from the luxury space into a mass market car. They want everybody to be driving a Tesla at every affordability price point. So they don't want to concentrate in that luxury market. So I think that opens up an opportunity for Lucid to come in and do exactly that, right? To take over that luxury EV market space from Tesla and maybe dodge some of the competition that otherwise experience from Tesla. I think it's a really good strategy. And the last thing that I like about these guys is that, in these deals, I look for everything to be in place for the company except the money they would need for expansion. And that's awesome, right? Because if you have a nice, tight little operation that has already solved all the technical problems, they've already grown to the point where they're ready, and then you dump in a big pile of money and suddenly, boom, that fuels expansion and they can go forward. That's exactly what you want to see in a company that goes public. It doesn't matter if it's a SPAC or an IPO or whatever. You want them to have a real need for this public money, and you want them to be ready to use it to build additional factories, drill into the R&D, get better, get bigger, and really go forward. What you don't want to see is dumping that money in to try to affect a turnaround or a pivot from a failed business model or bridge debt that you're carrying around from some failures in the past or something, right? And that's what happens a lot in this SPAC space. You get these companies that are struggling and looking for a lifeline. That's not the case here. These guys are absolutely ready for the money, and they have some smart plans, I think, in terms of being able to use it go forward. And one of the prime examples of that is the factory that they've just completed. They use the private money to get there, and now in order to ramp up to that 400,000 per year unit capacity, they can then take the additional money they raised by going public, and they can build additional factories. Probably in Saudi Arabia would be the next one. They're looking at expansion there, which totally makes sense.
Let's talk about risk.
Okay, so point number one on the bear case, I think, is the fact that they are at a good spot in terms of the infrastructure and the factory capability, but they're not yet producing cars. So, if you compare where they are in the timeline versus where a Tesla is, they're way behind, right? And if you would compare them to where Tesla was at that stage, Tesla had a ton of obstacles to overcome before they were in production, right? And potentially these guys are going to encounter all of the same sorts of problems, the same kinds of setbacks and delays and all that kind of thing. So there's a rocky road ahead of these guys that they're going to have to overcome. It would be nice to see that they had already produced a few cars prior to this point, so they're just a little bit earlier stage in that respect in terms of having real cars on the road. Number two here is the Saudi investment. There's good and bad things about this, right? So I think it's a positive in terms of the seriousness of the backing that they have here. That's certainly a good thing. I think on the downside, though, there's a couple of things that come with this investment. Number one is that the Saudi Public Investment Fund is going to steer this company in the direction that they want. And so I think that the future goals and the growth and where this company goes is going to be very much dictated by the majority ownership that the Saudis have. They see it as a key strategic build out. They want a local success story in country of building these cars. So they're very, very focused on that particular market. And what will that mean in other markets that Lucid may or may not be able to expand into? I think the Saudis are going to control that. And they're somewhat unpredictable, I think, in terms of what they might want to do. The other drawback that comes with this Saudi ownership and investment is the whole political situation around that. I think some of these large companies have been reluctant to put a lot of money into Saudi Arabia. The third thing here I don't like on the bear case is sentiment, and this is a tough one. On the one hand, there is going to be a ton of eyeballs on this company. Retail investors are going to get super excited about it. They already have, right? They're already buying up CCIV even prior to the deal. The reason I see it as a bear case, though, is that these are weak hands. There are literally people buying this company knowing nothing about it other than they do something like Tesla, and Tesla was really good, so I'm going to make a ton of money on this one, right? But those weak hands get shaken out at the first sign of bad news. They all run for the exit. And then when things look good again, they pile back in. And so the volatility on this one makes it a little bit difficult to own long term, and I'm a long term investor, right? And so I kind of look at that and go, wow, that volatility is rough. On the one hand, if you can time it and you can buy in the dip, it's great. On the other hand, it's so unpredictable in terms of the price volatility. So I do put it as a bear case point. I don't know that it is, but it's just something to be aware of, I think. On the plus side, look, if you're a short-term trader and you want that volatility, it's great because you can sort of surf those waves a little bit and maybe make a lot of money in the process. So I don't know. I don't like it. Maybe some others do. Okay, let's sum this one up. So look, there's no obvious red flags in this one. There's nothing I don't like about this company. Everything I'm seeing is a good news story to my mind. The bear case is rather weak. The points there I think are not all that significant. So yeah, I like this company. I think the bull case totally wins. I think they're a good one. I think if you look at the long-term prospect for these guys, I think they're going to do really, really well. They have the right people in place. They have the right money in place. I think it's a great story. In terms of speculating on this deal, though, I think that's where the red flags and the danger comes in, because the bull case is all about the deal if it goes through, and it's all about the solid company that Lucid is, right? But if you're looking to speculate on this one pre-deal announcement, you're really playing with fire, right? Because there's some big egos at the table. So although this deal seems to make sense for both of them, if they can't agree on the right number, if they can't feel like everybody's a winner at the end of the day, I don't think either party is afraid to walk away, right? Because, Klein can go find another target. He's got a lot of money. The Saudis can potentially do an IPO, or they can do a deal with another SPAC. Like, they're a juicy target with Lucid, right? So, I don't know how motivated these guys are to come together, and if things go wrong at the negotiating table, the deal could fall through, at which point the price on this thing is going to collapse right down to the floor of $10, and anything you paid in excess of that is gone. And then what do you do, right? Do you ride it out until Klein finds a new target? Might be the smart thing to do. So there is that one going on. On the other hand, if they clinch it, I think the opposite is going to happen, right? More and more retail investors are going to pile into this one after the deal announcement, so you could absolutely see an incredible price rise. So in terms of speculation in the short term, this one is super high risk and super high reward to my mind. Okay, guys, that's the story. Like I said, if the deal is announced in this one, I'll do a follow-up. I'd love to see the investor presentation on this one. I'll get into way more detail and analyze that, so look for that video after the deal is announced. I'll get on that as soon as I can. And if you like this, hey, throw the video a like. Consider subscribing and ring the bell so you don't miss the next one. And I'll see you in the next video.